This is BullionMax. Hi, I'm Mark Allen, along with Sean Reynolds, the customer service manager for BullionMax. This is a podcast that takes a look at precious metals on every episode. We're very honored to have a friend of mine on today. His name is David Parker. David has written 2 books so far and lots of essays, Income and Wealth, and my favorite, a San Francisco conservative. We're going to jump right in. David, welcome to BullionMax.
Thank you for inviting me.
So let's take a look. I'm going to turn to Sean a little bit because he's involved in an hour by hour basis. Last week, Sean, the market was going up. Price of metals were going down. This week, based on, I think, one of the reports, the market is going down, but the price of metals is going up. As we record this, tell us about the price of metals right now, silver and gold.
Yeah, so just this morning, I think with the news about the inflation numbers for June, the stock market took a hit, about 400 points, but gold is up today about $30 so far, and silver is up so far today about 50 cents. And we don't normally see that kind of volatility in precious metals, or at least historically we haven't. But, you know, we're in a different financial time, so to speak, right now with the inflation that we have and, you know, the war in the Ukraine and printing money like it's going out of style. Things of that nature. Got lots of folks concerned out there, and so I'm not surprised to finally see precious metals start to make a northward movement in the market.
Got it. So let's take a look, David. Inflation is on everybody's mind. I think the report that I read, it was up like 9%. Should we be worried about inflation? And is this, in your opinion, true inflation?
That's the right question. In my opinion, it's not true inflation. True inflation is the printing of money, for unbacked printing of money. We have pure demand, pent-up demand from the pandemic, and we have a supply in severe constraint. Factories have been closed, and they're still closed, and shipping is backed up, and the war in Ukraine is affecting oil prices. Those are all normal market activity. War is normal, so it's not inflation in my mind.
Got it. But at the same time, you said something. You said printing money that's not backed. I'm assuming you meant not backed by gold, because we've,
No,
since
not backed. Full faith and credit of the United States Treasury. That's a reasonable backing. The world will buy that, accepts that, and the U.S. has a huge budget deficit and unfunded liabilities of over 100 trillion. But that seems like a lot. It is a lot, but the U.S. can pay that off in a second if they have to. They can raise taxes if they have to. They can cut Social Security and Medicare. Tons of stuff they can do. They can sell bonds if they have to. So I'm not worried about it. Gold is not an investment. Gold is a preservation of capital. It's one means of preserving capital. It's an inflation hedge, true. Mm-hmm. But I'm an investor. I would never buy gold, and I don't buy stocks because I don't know what I'm doing. But real estate, that isn't going anywhere. Gold could be stolen, but not real estate.
In 1971, Nixon took the United States off the gold standard. We've talked to a number of people in recent weeks, and they were concerned about that. In fact, our one of our last guests, Ron Paul, said it was a dumb mistake. Would you agree that it was dumb, or doesn't it matter?
Yeah, I've given some thoughts to that I can argue both sides, I suppose. I just argued the other side just a second ago, saying as long as the U.S. backs it and the U.S. is considered safe, it is safe. It's all right, but it's the gold standard keeps people a little more disciplined and a little more honest. Um, Otherwise, you have countries that have wild inflation should be on a gold standard. The U.S. doesn't have to be on a gold standard, or a wild country should be pegging their pesos to the dollar or something, because we have very irresponsible governments throughout the world. They should be tied to the gold standard.
But at 9%, I mean, going into a market, I mean, you and I have talked in the past about wine, for example, okay? The cost of wine is going up. The cost of a loaf of bread is skyrocketing. Should we be concerned about that?
No, they're real. The reasons are real. It happens all the time, Marcus. There's shortages, and we have a case of shortages, genuine shortage, and genuine increasing demand. Normal citizens, at least in the United States and Europe, have savings accounts they've never had before. They didn't spend a dime for 2 years during COVID, and they got government checks on top of that during COVID, and people have just a natural pent-up demand for airline prices, and hotel prices are going to start coming back, and the war in Ukraine might be affecting food because that's the big breadbasket of the world. Mm-hmm. But that's the way it goes. If the U.S. were at war, people would wonder about food too.
Our guest is David Parker. He is the author of Income and Wealth and a San Francisco conservative. And between you and me, he puts in parentheses, not that conservative. I got a smile out of David. In the last week or so, Sean, what kinds of response have you had to inflation and to investment in gold at BullionMax?
Well, our sales are up, way up from last week to this week. You know, we're a growing business, so you always hope that's going to happen. But I think we're seeing an extra kick, particularly because of the concerns that people have. And today, as we shoot this, as the June numbers come out for inflation and the stock market is not doing well and metals are rebounding, those who've been sitting on the sideline hoping to buy on the bottom of the dip are starting to realize we may have bottomed out. And so it's time to get that order in that you didn't get in previously, when perhaps the last time we were at the bottom was the bottom. And so that's kind of what's really driving our business right now. Gold is particularly selling hot and heavy today. And so, people are really looking at that bedrock metal, and then, we're seeing some high dollar orders for that, but also a lot of orders for silver as well. So we've got all kinds of different customers across the spectrum placing orders with us right now, not just the affluent folks.
So you've got people who are looking to conserve wealth as well as to build wealth with precious metals.
Yeah, and particularly I think I speak mostly with seniors who are looking at protecting their children, their grandchildren. I can do this for them type of thing is what I constantly hear from them. So it's amazing that the American family, as we have known it to be, where the patriarchy takes care of the rest of the family, that's still alive and well. People are still trying to do that, help their kids, help their grandkids, things of that nature. And this is just another way that manifests itself.
Let's talk about that with David Parker. David, our seniors, are people, say, over the age of 50, still trying to take care of their kids, and preserve whatever wealth they have. And I guess the terms of buying power. So go ahead.
Gold, precious metals are a form of preservation of capital. They're not investment. And during a time like this, you're probably going to do fine if you bought gold. Whenever there's anxiety in the world, gold is a place to go. But you could buy the earth also. That's what I would do.
Mm-hmm.
And that's not going anywhere. Gold might drop in price a few years from now, and then what was the purpose of doing it if it takes a big hit if things turn around in a couple of years from now? That's gold to me is for professional investors and or professional. Yeah, if you want to make money at gold, that's something you spend a lifetime learning to do. But if you're an average person, you want preservation of capital for your children or your grandchildren, you'd be better off buying an income producing asset. Gold doesn't generate any income. You better hope that like overpriced stocks, you better hope that the demand keeps rising. Well, the demand might not, or it could turn around and take a big drop.
David, you and I are in California, and our real estate prices are out of this world. Sean, you're in Oklahoma, and I know you and I have talked about the fact that real estate in Oklahoma has risen, but with interest rates going up, is the real estate market slowing down? David, I'll ask you first.
Of course, it'll slow down in the short run. Single-family homes, there'll be people who cannot afford the same home, and the prices will come down because the interest rate was too high. But that's just short-term phenomenon. If there's demand, if demand is genuine, and if supply is genuinely constricted, I always advise buying property in rent-controlled cities because that supply is severely restricted, and that has to go up in value because the demand to live in places like San Francisco or New York will always be high.
Well, here where I am in Southern California, we don't have price controls. Actually, we do in I can think of one city, Santa Monica, has certain price controls. But I'm in a county just outside of Los Angeles that's slow or even no growth areas. Does that affect the cost of, to me, that would also affect the cost of real estate.
It should. The prices shouldn't be rising but if the demand to live there is beyond your county, then it'll rise. If the demand for real estate outside of San Francisco proper is also high because people leave the city because there isn't housing or it's because it's too expensive, and so that just pushes the price around. So if you're near a high growth area, then you will affect it, even if there's no growth in your particular area by itself.
Got it. You also mentioned that gold and precious metals are a hedge against inflation. Is this a good time to hedge against more inflation that may or may not come? In other words, the traditional thought of just printing more and more and more money, which you've mentioned, but this time seems to me to be totally different.
It's not totally different in any way whatsoever.
Tell us why.
War is constant. Man loves war. We do it for a living. Industrial complex.
There's money in it. Yeah, there's no denying there's money in it. Yeah, we love it for that. Yeah.
Yeah. Firearm business, they're promoting wars wherever they can. I'm not sure about that, but in theory, they certainly are.
Sure.
And this time this is a supply shortage from a pandemic. It could come from a nuclear war. That's around the corner. This is normal. And during those troubled times, gold is probably a safe bet. That's all I can say. A safe place to put some money, provided that wherever it's being stored is not robbed.
And Sean, that's a good point, because with BullionMax, you don't store the gold. The customer takes possession of the metal.
Oh, they
Correct.
do. I didn't even know that. The customers put it in a safe deposit box. Is that what it is?
Any number of different places. I've had some pretty interesting conversations with people about where they store it. Currently, gun safes are very popular because they're keeping their metals with their guns, and that's also a very nice lockbox that they have. But there are still people who have it in one of hundreds of shoe boxes in their closet.
Oh, it's like putting it under the mattress. That's ridiculous.
Yeah, I was thinking that too.
Yes, absolutely. People talk about that as well. You know, it's in the decorative pillows that are on the bed, but not the actual pillows, are not underneath the mattress. So yeah, people will do anything to just kind of keep it at arm's length, know where it is, but have it in some place where truly you'd never think.
That to me is that's not investment. That's running scared during wartime. The word investment, you know where the word investment comes from?
No.
During in Europe, Jews, for example, were persecuted and were constantly on the run. So they put their gold in thread in their clothing. Investment means clothing. So it's in your clothing and you can't see it. You can't see the thread. So they're walking around in what looks like rags, and they're walking around in probably $1 million worth of gold. That's investment. It's in your vest.
In your vest.
Investment. Literally.
Investment.
Literally.
Wow. Did you know that, Sean?
I did not know that. Today is a great day because I just learned something.
Yeah,
That's
absolutely. We should talk a little bit about David's background, because you've made your wealth not by being a public school teacher. And I believe your thought is that just about anybody can accumulate wealth, income and wealth, the name of one of your books.
My definition of wealth or being rich is that you're financially independent. You don't have to, I'm not talking about absolute dollars. You don't have to have millions of dollars, but if you don't have to work because you have income from income producing assets, and those assets usually have some tax write-off benefits, depreciation and interest on loans. You find yourself not having to pay tax, and you find yourself without having to work. So I give an example of my income and wealth of a minimum wage worker at McDonald's, and in 10 years is financially independent by saving half his salary and investing it with leverage in income producing assets. Just buy the house next door. I'm not talking about any sophistication. If somebody is asking $100,000, pay $110,000 for it. Just get it. Then buy the corner grocery store, buy a fleet of trucks, whatever you're comfortable with, buy some income producing assets and just keep doing it. Half your gross salary, live a Spartan life, share an apartment, especially when you're young. Then you're done. You're done. 10 years, you're finished. Then you can be an artist. You can open a restaurant. You don't care if it fails or not.
Your theory in this is
and I'm working out in detail, almost on an Excel spreadsheet. A whole chapter with everything, every aspect covered.
But how does somebody who's making, say, $16 an hour, okay?
That's a lot of money.
Well,
$16 an hour times 8, then stop the commuting every day, live around the corner from where you work, and pick up 2 extra hours at time and a half. You're already at $24 an hour for 2 hours a day times 365 days. And McDonald's gives you a couple weeks vacation. They have a 401k. They'll contribute to that. You can borrow against that for your investments later on. They'll feed you. Some of them have health insurance. Just look at it closely and you realize It's possible. And they cut your living style down. People living way over their means. Most people I know are living over their means. They're not comfortable. Don't live over your means. Share a house, share an apartment for a while. Share a car, share the internet. Walk to work.
I know people in apartments who borrow their neighbor's internet, right? And
I don't borrow today.
yeah, borrow.
I couldn't get on today. I almost had to go.
It's not the same as a cup of sugar, that's for sure.
Exactly.
Borrow the password.
David, you're also your whole approach is based on centuries old writings. Can you talk about that for us?
Well, I like the reference to know what reality is in business. I'm a professional investor, so I'm not, what I'm advising someone who knows nothing about business, may not have an education, but knows where the house next door is. It's next door. And how much does it cost? Well, ask the realtor. And just pay it. That's not sophisticated investment. Sophisticated investor are leverage buyout investors. So I'm teaching school my whole life, and I just spend a couple hours a day or less, and just making offers, and they just try to totally finance into the deal. When you do that, $100,000 or $1 million or 10 or 100 million, what difference does it make? You're not putting any money down. That's professional investment.
So you're using leverage to do that?
Yeah, 100% leverage.
Can you do that even in this marketplace with?
That's where I like to refer to timeless laws of money, business, and economics. There's nothing new in the world. Babylon, something 6,000 years, whatever that was, they had stone tablets, but they would measure property lines everywhere, and they were recorded on stone tablets in some depository. Everybody knew where their property was. Immediately, day one, secondary markets sprang up. I can borrow against that stone tablet. If I don't pay, that stone tablet's yours, that property is yours. You don't have to, you can still live in your house and you can borrow against it. And that loan can be sold again to somebody else in the tertiary market. Day one. And then I read something the other day that there has been some advice in the Talmud, which said 30% of your money should be in cash at all times, 30% should be an income producing asset, and maybe 30% should be out there with some risk.
Wow. And that goes back 6,000 years too. Interesting thing about David is that while you were teaching, you have a master's degree, I believe, in music and teaching education. You went back to school for hours. Tell us about that, to study economics.
I started to write a little bit what I'm talking about, but some epiphanies I had when I was very young. At 12, I read in the newspaper. I remember sitting at my table with my parents. A waiter had died in the St. Francis Hotel in San Francisco, and they pulled from under his mattress all these stock certificates. He was worth at that time like $1 million in the 1950s.
Wow.
When I was 12 years old, something like that. I says, that really almost caused me to think, how is that possible? That really started the process. He was working as a waiter his whole life. He loved the job. But he figured something out. And when I was about 14 or 16, my grandmother told me a story that my families are refugees from Europe during World War II, from Austria, right out of Sound of Music, ran into the mountains. And he was pacing the house. She got so mad at him. She says, "God damn it, you go out and get a job, or get out of the house, do something." He went out, came back the other day. I bought 4 movie theaters. He didn't have any money. I went and bought 4 movies. How is that possible? Again, and then the third epiphany came when I was my first year teaching school. I'm talking to the custodian. He had a little box, little office, and we were talking Pavarotti and debating Italian versus French cuisine. And then he just told me, I didn't ask, he says, I'm not doing this job for the money. I come, I have to talk to the students in the morning and put on the heat and talk to the teachers who arrive early. I love my little job here. I own 4 apartment buildings. I'm not doing this for the money. That's it. That's it. Those 3 leverage. There it is. You're financially independent. It's a never process. It's not come from saving your little money like a little mouse. Maybe you can buy 1 investment that way or fewer. Live that Spartan lifestyle. You can't do that forever. So that's great wealth is unrelated to income. That's my book, Income and Wealth, that they're unrelated.
Gotcha. We're going to talk with Sean just for another minute as we wrap up. Sean, what are inventory levels like for people who are looking to hedge against inflation, to maybe protect some of their money right now?
Yeah, we've got more people purchasing precious metals than historically goes on. I mean, it's amazing how many people are viewing this as kind of a safe haven, and really protecting what they've got, what dollars they do have. So some of the inventories are getting tight. We certainly are doing our best to keep things in stock, but just to set the expectation, we're not always going to have everything in stock, but then again, nobody is. This is something that all bullion dealers are facing in this day and age, because there's a lot more buying going on than there is selling going on. When I entered the business, it seemed to be pretty equal buying and selling going on, and we don't hear from many people who are looking to sell. Most people are looking to buy right now.
Got it. I have to point out that one of the things that sets BullionMax apart from other companies is the fact that the customer service is just extraordinary. In a minute or less, Sean, tell us about that.
Yeah, I think a lot of it really stems from my experience in the department that I want to run, and that is that we understand that this is something that matters to people, and since it matters to you, it matters to us. So we are going to listen to you. We want to hear what it is you are looking to do, and we will point toward products that should help you, meet those goals. But ultimately, we want to get you educated so you make the decisions for yourself. It's not about selling you something because I said so or anybody else at BullionMax said so. It really is because we've given you the tools to understand what buying this is, how you buy it, what does that mean. Yes, we are going to ship it to you, so make sure you got a place to put it, and just making sure that people are enjoying the experience in the process, because this is something that people get. They've got great concerns. And so to listen to those concerns and take the time, where other companies are you buying today or not? They really don't want to take the time. We will take the time. And that's probably the biggest difference right there.
Sean, thank you as always. And, we presented David because he has a different point of view than many of the people that we've talked to here on BullionMax, the podcast, as well as just another thought for you, the viewer. If you want information, we've had this up all throughout our conversation. You can always visit davidparkeressays.com. I think Sean took a look around this morning. davidparkeressays.com. You can even find out from there how to buy his books, or you can go to amazon.com. David, thank you for your insightful thoughtfulness today. We really appreciate it.
All right. It's a pleasure to be here. I learned something too.
What did you learn?
I didn't know that gold really was a commodity. I mean, you're shipping it, the real product.
Actual stuff,
I never knew that. That when I talked about you could lose it, I was really right.
You were right. You were
Yeah.
right. And hey, this coming from a guy who wrote a book that somebody said, I wish I would have read this 20 or 30 years ago. I mean, that's pretty cool. There must be some amazing insights for people in your books. So I'm planning to read them myself now that I've met you and learned a little bit about
Investment.
investment is. Yes, exactly. So that's fantastic. I appreciate you.
You
And
got it.
people who are buying gold, this is probably the time to buy it. I want to support you too. All right.
Well, we appreciate that. David, hold on. Sean, hold on. I'm Mark Allen. Thank you for watching. We'll see you on our next episode. Bye-bye for now. Don't miss an episode of BullionMax. Subscribe to us right now.